Moon gang. Hello. That song, why did I pick it? Did the instrumentals speak to me? Not really, but I enjoyed it. Very legitimately, the reason I picked that song was because the name of it is Chunky Nuts. And whenever you see a song with such a strong title, you got to give it a listen. You got to give it a listen or two. So yes, that was the song Chunky Nuts. And I think it really fits with today. I think it really fits with what is truly going on today. So Power Hour, we're kicking off. We're 2 minutes into Power Hour. I would like to point out that we were speaking about the signal from, was that Unusual Whales or where was it from? But we were talking about the Unusual Whales. Honestly, it may not have even been through it. It might have actually just been because of what we were seeing in the chart on Nvidia. And I do remember kind of like, hey, things are bouncing. Tech's looking strong. The market's looking strong. The Nvidia call. So early this morning when we were talking about it, I myself got in at $7. That's how much the option was worth. And to give you the details of that, I'm just looking it up right now. I have to look it up because I already got out because I told you I was locking in my gains. So the expiration date was not this Friday, but next Friday, December 17th. I was looking at the 325s. And when I announced it publicly, you guys saw it live. I got in at $7. Right now it's trading at $8.50. At one point it was above $9. That's over 10%. I've already locked that trade in. If you haven't already, I guess that's okay. It's just please have a trading plan. I was kind of trying to express to people that maybe when you're up 10%, which was a nice trade. I mean, $7 to $8 is more than 10%. I locked it in at a full dollar, which is what, about 14%, a little over 14%. That's a nice trade. It doesn't take time long for your account to double if you're continually hitting 10% trades. But anyway, with all of that, in the recent weakness in Nvidia, I re-entered that trade. I'm just trying to be as public as I possibly can with what I am doing. I like to share my winners with you. I like to share my losers with you. I am in this Nvidia trade again. This time, I ratcheted it up a little bit. I'm now looking at the Nvidia 330s also for December 17th. So I gave myself a week and a half. The premium that I paid per one was, what was it? $7.11, and it's currently trading at $6.60. Once again, I paid $7.11 per one, and it's currently trading at $6.60. Once again, similar to this morning, don't get greedy. Like, you're not going to have every trade be some crazy 50, 100, 150, 1,000% trade. At a certain point, you got to be a little bit realistic with it. And with this one, my reasoning behind it really hasn't changed much. Probably shouldn't have been so chasey. I just strongly feel it's going to trace 324. Now, what I like particularly about this play, a little bit more risk. But for all those people who are potentially battling with pattern day trading, this could be an opportunity for an overnight swing where you don't have to burn one of your day trades. I think that's like something that's going to be nice because I know a lot of people listening right now, there's a good chance that your account is less than $25,000. So as soon as you do your 3 day trades in a week, you're kind of stuck and you're like, all right, well, this trade isn't like really that helpful for me. So I was actually just speaking with like a team member, and I was trying to figure out like kind of a methodology that we could use and track that involves exclusively swing trades where you don't have to worry about burning your day trades. So that's kind of cooking in the back end. I want to kind of do some back testing, get some metrics and study up on some numbers for you. But that's something of interest. And actually in a little bit, we're going to be going over a new indicator today. I really like doing this teaching part in the afternoons of where we go over some specific stuff. And today we will be speaking about the Bollinger Bands. We'll be doing that in a couple minutes of just the math behind the Bollinger Bands, how to use it, what it means, what it doesn't mean, and some potential trading strategies around it, its pros, its cons, where the situations where it can be utilized, other situations where you might not want to be using it as much. But once again, we will be going over the Bollinger Bands in a little bit. But before we get into that, I just want to give you an update on Nvidia. I did close that trade a little bit over 10%, and then I re-entered it as of currently. I'm down on it. I got in at 711, currently trading at 660. I have no issue swinging this overnight. I would actually prefer to swing it overnight, and an ideal situation to me would be to sell it into morning volatility. Remember, options are priced by three things: the price of the underlying asset, the time until expiration, and then finally, an important one that people don't really seem to forget, is the volatility of the asset. A lot of people are just saying, well, hang on. So for example, it's at 321.50 right now. It was previously at 321, but the fact that it's at that same price later and the volatility has gone down a little bit means that options contracts are even worse. They're worth less prior to the first time we were at 321. So remember, price of the underlying asset, time until expiration, and the volatility of the underlying asset. All three of those are incredibly important when pricing an options contract. Incredibly important. And with that, that's why I think that there's some sort of statistical edge of the market opening, because there's more volatility at market open, and then there's also volatility typically at market close. So in higher volatility environments, you're naturally going to see a little bit of juicing in what's referred to as IV, implied volatility, and that's incredibly important when it comes to anything about the world of options, just so everyone knows. But before I go on too much of a tangent, let's give a quick recap of everything that's happening. So right now, the S&P 500 is having a great day. I love that it closed its gap early this morning, and then we have a nice base, and we're pushing higher and higher. I'm watching 470 and some change. We are very, very close to an actual all-time high, about, $5 away? A little over $5 away, so looking good there. The Q's looking strong. I'm still calling out 400. Yes, there's a gap to 387.53. Eventually, this bottom, this downward gap, will get filled. But right now, after this sell-off, it looks like we are getting some bullish momentum. My next target on the Q's is the key psychological level of 400 flat. This will be highly impactful for the tech stocks such as Apple, such as Nvidia. The Russell 2000 been selling off ever since the all-time high on November 8th of 244 and some change. Sold off, came down here, consolidated around the support of 215, 216. Another similar, we have a gap up once again, like the Qs. I do think this gap will eventually get filled at 220.70, but for right now, I would love to see the different gap fill all the way up to 228.50. That is my target for the Russell. So that's the SPYs, the Qs, and the Russell. In terms of the daily chart for AMC, we are looking very strong, a close above 31.25, especially on some volume. Right now, the volume is slightly above average. It's at 41 million. The 10-day average, obviously over the past 10 trading days, is 40 million. So we're above average, but we still have about 50 minutes to go. So maybe we'll be pushing. But right now, I like this breakout. It's sold off, consolidated, and now we're pushing. Would love to see it come back up to the $35 region ASAP. The GME can't stop, won't stop, GameStop, bouncing off the support at 167. Look how many red days it ever had since November 23rd. Once we got into Thanksgiving, sold, hit support. We're once again bouncing. Would like to see it get above 187, and then I'll be watching around $200. In terms of the Ortex update, the estimated short interest on AMC right now is 18.67%, and GME is 12%. We actually had the official Ortex Twitter account tweet this out prior. AMC is currently up around 4%, and short interest is the highest level it's in almost 2 months. Once again, this is coming from Ortex itself, and that was in reference to AMC, and then in reference to GME. GME is currently up 5% ahead of its Q3 earnings tomorrow, Wednesday, November 8th. Don't forget that. That is a fundamental catalyst. You don't know what will or won't be said, and we could get some definite volatility out of that. Estimated short interest currently around 12%. So both AMC and GME, clearly the short interest is going higher and higher and higher. And we were kind of referring to this with the overall market, that this is what's going on. Largest 10-day net selling in U.S. equities since April of 2020. Hedge funds continue to reduce net exposure through shorts, as in they're coming off their long exposure by increasing their short, and this has happened for 10 days in a row. That's absolutely crazy. So not only is this impactful to individual stocks such as AMC and GME, but clearly we're seeing an impact on almost all equities, the entire market. The shorts are starting to load up, and if they're wrong, you might see an overall market short squeeze. Obviously, it's not like the S&P 500 is shorted to some crazy 200% level, but just in general, like if you see a short interest above 2% on the overall market, that's kind of crazy. That stuff doesn't happen often. That's definitely a statistical anomaly. So if those shorts start to get burned, you might see an extra like 2-3% pop, and an extra 2-3% pop in the overall market. That's a lot. That is billions and billions of dollars. So sometimes we have to realize that these percentages, understand what they're actually percentages of. In the S&P 500, we're talking over $50 trillion. That's a shitload of money. So when you see these bearish bets start to load up, and when you see these bearish bets start to load up erroneously and they get it wrong, it's kind of it's the recipe for some fireworks. It gets me excited. So that's your quick wrap up of what's going on in the overall markets. Two of our favorite moon stocks. Let's check on some of our other ones. Right now, Prague, we had a solid morning above 3. 3 is a key psychological level. Couldn't hold it 272. So let's hope that Prague comes back to that tomorrow. Lucid, nice gap up, going a little bit red. Similar story with Rivian right here. Gap up, going red. Tesla is actually fighting back. It gapped up, went red, almost closed the gap, but now it's hanging out at pretty much its open value. A little bit of a scrub day on Tesla. And I think people are a little bit confused. So we see the overall market going green, but then Tesla just had its recall of some of the autopilot cameras. And on top of that, a couple of days ago, they announced an SEC investigation similar as Lucid. So people a little bit worried about, okay, what is or isn't going on. But in general, yesterday it did jump off of this support. It bounced off of the support around 950. We've already talked about Nvidia. Robinhood hit an all-time low yesterday, showing a little bit of a relief. In terms of crypto, Bitcoin still hanging out above 50,000, Ethereum at 4,300, Solana 194, Avalanche 92. If you're in Avalanche, maybe this is being a little bit selfish of me. I would honestly love for it to come back down to 80 so I could buy some. I missed that. I missed 2 opportunities. I was just like a little bit hesitant because everything was selling off. I didn't know how to read it. But 80 is such a nice support level to play off of. Maybe we'll be gifted with that opportunity. Maybe we won't. As of now, I have Bitcoin, Ethereum, Solana. I don't have Avalanche, but I have Matic. Matic is still doing pretty well. It's at 236, showing quite a bit of strength. Would love for Matic to explode all the way up to 3. Look for that breakout above 250. Loopring strongly recapturing $2, going up to 250. Right now showing a little bit of heaviness, kind of starting that arc pattern of like almost like you throw the ball up in the air, starting to come back down right here. I want to see where it's going to build support. If we can continue this pattern of higher lows, I'm excited. With Loopring though, I want to throw it out there that don't forget, GameStop's earnings report is tomorrow. If there's any development of them confirming, yes, we are working with Loopring. We already know they're building out an NFT marketplace. But if they give us true confirmation, there could be excitement in LRC itself. So don't be surprised if this thing, along with GameStop, express some volatility tomorrow. SHIB currently trading at 37. I still hold mine. I'm holding on to it. Cardano, a little bit of a bounce, 130 up to 140. If I'm being completely honest, the price action recently with Cardano, I found to be very, very upsetting. I haven't sold any of it. I'm still diamond handing it. It's just, I guess I'm sharing my emotional state with you. But when I got into Cardano, I was mentally prepared to hold it for years and years and years. And it coming down by $1 is not going to dissuade me from that. Doge, currently trading at 18 cents, definitely taking quite a bit of a hit. Hex also taking quite a bit of a hit at 13 cents. All of these things besides Avalanche, I am in, I am holding, I refuse to sell, nowhere even close to selling. I'm happy with what's going on. And most of them, other ones, I just need to express a little bit more patience. And particularly, I am eyeing up Avalanche. And I have to be fair, I've been studying Ripple a little bit more. I don't know how many of you are or aren't in Ripple, but I think this is currently trading at 82 cents. Depending on how this lawsuit does or doesn't go for Ripple, I think it is grossly undervalued right now. Maybe I'm being a little bit too optimistic for the lawsuit. Maybe. Obviously, that's a chance. But I think this is a crazy good value. But once again, the two that I've been talking about that I do not own right now is Avalanche and Ripple. Those two are on my list of things that I'm highly interested in kind of picking up. Don't have them, but let's see how it plays out. So Crow, I see someone asking about Crow. Crow, I just missed the boat on it. Someone said I missed it, and you're spot on. I did miss it. I mean, this huge explosion ever since, this is crypto.com's, but they kind of exploded with like signing the celebrities and famous people, buying the naming rights to the Staples Center. I feel like I just kind of missed out on it. Yeah, I probably should have thought about it more and got in at 50 cents. I just missed it. Like, and that's okay. You're going to miss opportunities. I think if you're in this, crypto.com, talk about SEO. The fact that they just own crypto.com, that domain alone is so much value to the company. If you're in it, I think there's opportunity there. I personally don't have any. I just feel like I missed out, and that's part of the market. You're not going to get everything. You don't have an infinite amount of time to study all fundamentals, to study all technicals, and you don't have an infinite amount of capital to put into all these individual things. At a certain point, for whatever reason, you have to start to pick and choose of like, okay, this one's for me, this one's not for me. I see potential in Crow. I just feel like I missed it. And I feel like right now, as of December 7th, I still have opportunity to not be like too late to the ship, to be too late to the party on things such as Avalanche and Ripple. I can taste this AMC breakup and adding 33, 36 calls all afternoon. It's getting dangerous. And when I say dangerous, I mean dangerous to the most recent shorts. To me, everything about the current intraday setup on AMC is a bullish one. We have a pattern of higher lows, the same high at 3160. So what is this telling you? Let's think about this psychologically. This chart, let me start drawing. Whoop. All right. So when we have a chart set up with this, like what does this tell you psychologically about the market participants involved in it? Well, the first thing you're going to notice is the same high, 3160, as in the sellers, whether they are shorting or whether they are locking in their long position, it doesn't matter. Selling is selling. They are holding strong at this level. But there's not an infinite amount that could be sold at 3160. So every time you hit it, it's soaking up more of that supply. So picture it as a brick wall. And every time you hit that brick wall, you're slowly taking down some of those bricks. You don't know how big said brick wall is, but every time you hit it, you know it's getting smaller and smaller. Every time we get closer to it, you're soaking up that supply. Now on the bottom side, we see this pattern of higher lows, and then as it runs into the same wall on the upside. What does this tell us from a psychological standpoint? Well, one potential thing that you can glean from this is the fact that the buyers, the bulls, the apes, they're getting more aggressive. Every time it dips, they're buying it, but they're buying it at a higher level, as in they're showing more and more aggression. They're showing more and more confidence. So you have this wedge scenario where you have a pattern of higher lows, as in buyers are getting more aggressive, and the same highs, as in the bears, the sellers, they're keeping the exact same position, but we know they don't have an infinite amount of stock to sell. So it's almost like a weird siege war, for like, I guess, lack of a better term. Once again, you can see this type of stuff on various time frames right now. I'm on the 5 minute, on the intraday. Does it always have to play out this way that you get the breakout? Well, no, not necessarily. There's going to be no technical pattern, no technical indicator in the entire world that has 100% accuracy. That's just not how the stock market works. There's too many unknown variables. There's too many variables straight up that you're ever going to have like something that is 100% accuracy. You're always playing situations that there's some sort of edge for you. For example, if you're playing blackjack and you are dealt 2 10s, if you're dealt whatever that is, 2 10s or 2 face cards, whatever it is, that's a very, very good hand. Does that mean you're going to win every single hand? No, because obviously the dealer might be dealing themselves blackjack. That's a possibility. But most times you're going to end up winning. So with technical analysis, you're in the game of attempting to stack the deck in your favor and then making the appropriate bets when the environment is right, is probably the best way I can explain it. So right now you have it here psychologically where the buyers are getting more and more aggressive. Yes, the bears are holding their ground, the sellers are holding their ground, but we are soaking up the supply. And This leads to other technical structures. For example, you've probably heard me talk about this all the time, a cup and a handle. Here is the cup, here is the handle, the higher low, and now you're consolidating still at 3160. You're getting a little bit more volume. We're seeing that aggression and you're looking for that breakout. You could, at a certain point, call it an inverse head and shoulders. Like, there are many technical patterns that are going to have overlapping names and they're going to be seen in very, very similar situations. But no matter how you like dice it up, maybe not so much on the daily chart, but on the intraday chart, you could argue that AMC is pretty bullish right now. In terms of GameStop, bullish, bearish, neutral, just not moving. It's done a very good job of not going much anywhere. It is up 5% on the day. A 5% on a day, it's kind of hard to say doing nothing if I'm being fair and critiquing myself. AMC is up 8.6%. GME is up 5.3%. Remember these days, when I see this negativity across the board, it seems to be so much more extreme. For example, what I'm trying to articulate right now is when we're down 8.5%, when we're down 5.2%, everyone is freaking out. But then when we're up that much, people are acting as if like that's how it should be. That's normal. We should be as excited, folks. We are up 8.5%. GME is up 5.2%. These stocks are in the green. People are making money today. There's a very good chance that your daily P&L is in the green. That's something that should be celebrated, especially with a week and a half of us getting our teeth kicked in by the entire market. We got to revel in these moments. It's just, this is awesome. These are great gains. We're seeing what we want, and it's just $1 at a time. I think that's one of the healthiest ways to think about it, is 1% at a time, $1 at a time. It's a slow marathon of a fight, a form of a siege war. You got to take your victories where you can. All right. Maybe not yet. So the Qs, I'm seeing a little bit of weakness right now. Nvidia is holding, like I said, I'm still in Nvidia, like for a quicker term play. And then of course, just diamond handing AMC and GME. Qs seem to be taking a little bit of a breather right now as we have about 30 minutes to go. IWM, it shot up and it's been flat all day. Let's see if it can hold 225. And then the SPY, similar thing. It shot up and it's been flat all day. So morning enthusiasm for sure. And then since then, everything else has just been flat. The Qs were a little bit more enthusiastic all the way up till 2 p.m. And since then, similar thing. All of the three major indices seem to be testing a level of support. So let's see if that will or won't hold. Let me see what kind of alerts. Before I get into the unusual whales alert, I would just like a quick shout out to all of you. If you could hit that like button, helps me out. Just helps me out with the algorithm. That type of engagement, it signals to whatever you on, whether you're on Rumble, Twitch, or YouTube, just to promote it to more people. So if you haven't already, I would greatly appreciate if you could take that half second out of your day just to destroy that like button. And also, if you want to be a member of the Moon Gang, all you have to do is hit that red subscribe button. Liking, subscribing, completely free, and it's honestly the only type of help I truly ask for. Anything above that is exactly that. It's above and beyond. Thank you so much. Hey, Matt, any ideas of what's going on with public today? I've been trying to buy the dip. Oh, yeah. So this is not a public issue. It's an AWS issue. Amazon Web Services outage causes issues for Disney Plus, Netflix, Coinbase, public. The list goes on and on and on. So AWS is the best way. It's a cloud. It's where a lot of people are, I guess, storing their applications, and it's what runs its applications. So when AWS has issues, a lot of things have issues. Right here, Disney Plus, Netflix, Coinbase, public, the list goes on and on and on. AWS is the provider for so many, it's crazy. If you see the list of things that are down today just because AWS is down, your jaw will hit the floor. So yes, public is using servers, like the backbone is going to be from AWS. So when AWS goes down, public, among many other things, is also going to have server issues. When I was working in the tech sector at some banks, we had this stuff all the time because AWS was our provider. So if AWS went down, like there were certain days that AWS would go down or GitHub would go down, and we would just be sent home because there was like nothing else to do, because literally you just couldn't do work. So that's the story with Amazon, with AWS, with Disney Plus, Netflix, Coinbase, public. The list is it's a litany. It's a litany for sure. All right, we went over that. Robinhood all-time low yesterday. The SPY showing some strength. Let's see. I'm very curious if the overall indices are going to all catch themselves and push for the remainder 30 minutes of Power Hour. Watch some YouTube videos on Nikola. Big announcement soon. Inside info. Great long-term investment in my honest opinion, not financial advice. So Nikola has some interesting baggage because of its previous CEO. I'm fully aware that their previous CEO, who could best be described as a lying scumbag, I would say is accurate, not a lawyer. He's out of the company, which is good. You got to get those cancerous parts out. But people are always going to remember Nikola for that. So is that fair? No, in no way is that fair. Obviously, it's not fair because the guy's gone. Trevor Milton is his name. And if you don't know about the Nikola story, basically they just completely lied to everyone. They basically said that they had a working EV-based truck, and all they really did was drag a truck up a hill, put it in neutral, let it go down the hill, and they filmed it to make people, like, with the assumption. They let people assume that they had a working model, and they really didn't. So since then, that guy, he's gone, and I get it. Like, okay, we can't judge it because the guy's out of the company. But so many people still remember that, and I think it leaves a bad taste in people's mouth. So that's kind of tough. Like, you have to, is it fair? No, it's absolutely not fair, but it's also reality. And when people hear Nikola, they just automatically think of like, oh, that guy who lied in the past, which that is not the current leadership team. It's not the board. It's not currently what the company represents, but people still think about that. They still remember that. So when it comes to those types of situations, like I said, I want to reiterate it now for the umpteenth time. Is it fair? No, but is it just how human brains are wired? Absolutely yes. So sometimes, unless they're doing something that is jaw-droppingly impressive, sometimes you have to just look at maybe other plays that don't carry so much baggage. I think something similar to this is, imagine if Robinhood got rid of Vlad Tenev. Imagine if Robinhood got rid of its entire leadership team that was present when they removed the buy button. People would still talk shit on Robinhood. It's not like all of a sudden them getting rid of everyone people would be like, okay, I'm cool to go back on with Robinhood now. Maybe some people would, but there would still be people who are like, no, I know what Robinhood did in the past and I refuse to support them. So it's just more of like social PR issues. Completely off message, but the Lakers Celtics game tonight, is that a big game? Lots of celebs. Important for me to know. Thanks, USBB fans. I will ask the entire chat that. I'm not the most knowledgeable about NBA. Once again, this is for Chris. Is the Lakers Celtics game this evening an abnormally important game? We have a Moon Gang member that would love to know. What are your thoughts on MRK? MRK, Merck. So kind of in the battle against COVID, they're coming out with an antiviral pill. It's at support. I mean, if you're just looking for a risk to reward setup, you could risk $70. You could risk $2 and maybe then just play the gap fill. I'm not by any means the most knowledgeable. Historically, it's a rivalry game. Yes, let's go Lakers. Fade the Lakers. Not really, but it's a historic rivalry. Historically, yes, but both Lakers and Celtics are trash this year. So it sounds like in the past, that could be a big deal, but not this year, because it doesn't sound like either of the teams are performing that well. If that's fair, sorry if you're a fan of either of those and I'm getting this wrong, my apologies. But it sounds like in the past it's been a huge rivalry, but not this year, because I guess like it sounds like neither of the teams are performing that well. But overall, with Merck, I am not a pharmaceutical expert. I do from a technical perspective. I like the risk to reward setup. You could risk $3, $2, $5 for the chance of riding this all the way back up for $10. That's a good risk reward setup. The stock overall has done a great job of going absolutely nowhere, essentially range bound. You're buying it at the bottom of the range, looking for another bounce like it's done successfully pretty much ever since November of 18. So it's not a nice trending stock, but maybe you could just play the range back up to 82. I think there's better opportunity, but I think there's still opportunity there. AMC dropping fast. I mean, it's dropped from 31.20 to 30.60. I think that's a little hyperbolic. I mean, an 80-cent movement on AMC, that's kind of par for the course. Thoughts on SO&M? Check out the RSI low float. So low floats aren't my favorite type of plays. And also, I mean, this one just looks bad. Like I don't mean to like shit on it if you're in it, but all this stock has ever done is make lower highs. Like ever since June of 2019, all this stock has successfully done is trend downward. Lower highs, lower lows. I just don't see buyers on it. It is extremely oversold. So maybe if you're in it for a quick reversion play, but this is not, it's a downward trending stock. So maybe it's too extreme right now, and maybe you can shave off a couple percentage points, ride it up to 157, maybe ride it up to 180. I don't know much about it. They did a stock split, a 10-to-1 stock split. This seems like a mess. It really does. I don't mean to be like too negative about it, but at a certain point, I have to be kind of honest of when I've seen similar plays like that in the past. And for years, like literally for 2 years, when all it's done is trend downward, like that, you're trying to catch a falling knife. Yesterday I asked what options you like right now. You saw option calls for Pinterest and some others. Where did you see that made money and want some more? So Pinterest, I believe that one was from Unusual Whales. Nvidia is a stock that I just track daily. So the Nvidia one was just from what I saw in the chart today. Pinterest came from Unusual Whales. There was another one that we got off of Tiblio yesterday. I'm trying to think of what the ticker was. Total open interest. So there is some abnormal things going on with MRVL. Let me see what's going on here. Oh, that kind of explains it. A little late to the party on MRVL, but if you're in this, congrats, because you are crushing it. The semiconductor industry is just having a great run right now. Today, particularly, semiconductors are doing super, super well. What is this one that just came out? This was another one that just fired with Unusual Whales, net. Cloudflare. I'm actually a long-term supporter of Cloudflare. I've been watching this trend line. It came down to it. So it was riding it forever, and then it broke down, fake out, breakdown, exploded upward. But now we're potentially playing the bounce off of it. Cloudflare, cybersecurity. If you're okay with risking 144, which is about $12 away, you could ride this puppy all the way back up to hopefully 180. If it gets very bullish, you can then watch, what is this, 205, and then obviously you have the all-time high of 221. Risk reward right here is very, very nice. Let me check out the RSI. I wish the RSI were a little bit more oversold. I think there's opportunity here. Now, does that mean go play weekly lottos on NET on Cloudflare? No. The minimum I would look at is like the 160s, the 162s for December 17th. I think there's opportunity there. This might be a good long-term investment option. You waited for, how much of a decrease was this? You waited for a 32% correction. So you have Unusual Whales firing off a December 10th. So they're actually calling out the weeklies for 165. I would give yourself to December 17th. I'm not going to take this play because I'm a little tied up in Nvidia right now, but I think this is a solid play. I know a little bit more about this, like long-term fundamentals, just from my background in technology and studying this one. But between what we're seeing in the options market and what we're seeing in the chart, It's a little bit of trying to catch a falling knife, but your risk is well defined at either 150 or 144, trading at 156. So if it goes awry and the play is wrong, your risk is not that big. So you could go, there's various ways you could do it. You could do a call debit spread. You can buy calls straight up. You could sell puts. You could do a put credit spread, or you could just buy stock. There's various ways you could do it to capitalize on it, and they all have varying amounts of risk and reward. For that one, I would be biased to two types of plays on this one. And I don't own any net right now, and I will not be buying any today, just so everyone knows. So this is me having no position. I would be biased to the 160. I would either be biased to the 160s or the 170s for December 17th, and I would try to lock in a 10% gain. The 160s, 170s, that's your risk tolerance of like, okay, how crazy bullish do you want to be? I would be risking 150 or 144. I like that. Or the other way I would do it is if you know about Cloudflare, this could just be a good long-term investment opportunity at a 30% retraction. So those are one of two ways that you could play it. I think those would both make money. Once again, I'm not playing it. I'm in Nvidia. This is the second time I'm in Nvidia today. The Nvidia, I called it out. I think I'm in the 330s for December 17th. Remember, whenever it comes to it, unless you are positive that you're day trading, unless you are like 100% sure, I am getting in today and I'm getting out today, I think it's statistically disadvantageous to play weeklies. I think there's too many people who are bragging about these lotto plays on social media, and they act like they're super easy to pull off, but no, those are few and far between. Hey, Matt, can you say hi to my son, Enzo, and my daughter, Summer? Shout out to Enzo and Summer. It sounds like we have some space apes in training. I hope you're having a great day. Yep, truck on hill, release the brake, and there you have it. Gravity vehicle, aka Nikola. Not sure how they come back from that debacle. Shout out, Mike. What about Penn? Penn. At these prices, I just want everyone to know, I actually added Penn to my long-term portfolio. I like the support. I think it's getting beaten down. I think it has a little bit less risk than DraftKings because its portfolio doesn't just include online gambling, which it gets through equity ownership in Barstool Sports. But beyond that, it also has physical casinos. So I think it's a little bit of has less risk associated with it. I added Penn at these levels to my long-term investment. More than happy to hold it out for years and ride this up to a new all-time high. I just don't think gambling is going to go anywhere. Matic. I'm in Matic. I love Matic. We were talking about Matic. I included Matic in my cryptos to watch yesterday. I don't know how many of you may or may have not have seen that, but I made a cryptos to watch like this week type of a video, and Matic was one of them, along with Loopring. I found particularly interesting between Matic, Loopring, and Avalanche. All I think worthwhile really to have on your watch list for the remainder of the month. Did you miss the Bollinger lesson? No, you didn't. We could do the Bollinger lesson right now. Well, folks, welcome to Teaching Technicals with me, Mateo. Today, we're going to be talking about Bollinger, also known as Bollinger Bands. So, highest level of what you need to know about this is, first of all, this is the MACD on the bottom. It is in no way that. Bollinger is a very common technical indicator, and it really became popular, as far as I can understand from my historical research on it, in the early 2000s. That's when John Bollinger, the guy who created it, hence the name Bollinger Bands, wrote a book that was pretty popular. So to start off, to be able to understand Bollinger, the first thing you have to know, actually, this is the Bollinger, this is what it looks like. But to start off, Let me start with the simple moving average. That is going to be the middle line of a Bollinger Band. This is the 20 bar simple moving average, as in it's taking the most recent 20 closing prices of whatever time frame you're on, and it averages it together, and that's how you get the current value. So that is, once again, the 20 SMA, simple moving average, most commonly the closing price of the 20 most recent bars. Yes, you can change this if you want the 20, if you want the 50, if you want the 10, the 13, whatever, but the most common one is going to be the 20. And the reason I'm bringing this up is because it's probably the most important part of the Bollinger Band. As you can see, when I show this or don't show this, you're not really seeing the color because it's the exact same line. So this blue line, if I put up the Bollinger, it's going to be the exact same. It turns orange because that's when I have the colors on my Bollinger. So my point is this middle line is the 20 simple moving average. Right now, I'm on the S&P 500 2-hour chart because I think it'll be good to teach you. So what's the leftover? So you see this kind of white region, and this will be actually referred to as like the bands, the volatility bands. I think I've even read that some people refer to it as the envelope, whatever you want to call it. We're going to call it the bands, the volatility bands. I think that's the most common. So what this is the distance between the simple moving average and the top band, or the simple moving average and the bottom band. This is going to be your volatility bands, as in it's going to be where most of your trading actually occurs. It's going to be centered around some sort of meme. And if you want to get really specific about it, this is a 2 standard deviation move away. So if I were to draw this from here to whenever that occurs, from there to there, from there to there, it's 2 standard deviation moves away. So I don't want to bore you too much with a quick math recap, but for those of you who want to know, don't forget that standard deviation is the square root of variance. So you're getting from some sort of average value, how likely is it to move away from that? Like what's a normal band of price action? So when you're talking about 1 standard deviation, that encompasses about 68% of a normally distributed price movement. 2 standard deviations is about 95%, and 3 standard deviations is about 99%. So once again, this is 2 standard deviations. So it's covering about 95% of price action, which is telling you that when you get on the outside of it, that's actually pretty abnormal, because 95% of the price movement should be within these bands. So when you see it poke above it, that's pretty abnormal. And then if you switch it to 3 standard deviations and you poke above that, that's very, very abnormal, because that's actually covering 99%. But once again, this is 2 standard deviations covering 95% of price action. And another way you could look at this, because obviously it's covering the moving average, that's this middle line, the 20 SMA. When it gets very tight, as in the difference between the top band and the bottom band is pretty close, that's actually telling you that it's a low volatility environment, as in the average price movement, the average price action, it's not really moving. And then when it gets very wide, like it is recently, that's telling you that it's a high volatility environment. This naturally ebbs and flows. A lot of people who use the Bollinger Band, they look for environments like this, be like, oh, okay, it's low volatility, the bands are pretty close. To them, that tips off that there's about to be some sort of movement. Now, does that tell them if it's going to be an upward or a downward movement? No, not really. It just tells them that we know the market typically flows from periods of high volatility to low volatility. Another way you could use this is the fact that right now the bands are very wide. So that could actually tell you that we're most likely going to enter into a period of lower volatility for things to calm down. Once again, when you get into the market, there are these natural cycles of ebbing and flowing, high volatility, low volatility. We've gone from low volatility to high volatility. I would not be surprised if in the very near future, at least based on the 2-hour bar chart, we see a period of low volatility, just because that's how the market goes. So quickly to recap before we get into some of these trading strategies, the middle line, this orange line, is the 20 simple moving average. The bands above it, also referred above it and below it, also referred to as volatility bands, are just a standard deviation of the moving average. What I'm showing you right here, and what's the default for Bollinger, is a 2 standard deviation move, which is going to end up covering 95% of price action. This leads me into potential strategies of how you could trade it. Now, I'm not telling you that this is how you should trade it. I'm not a financial advisor. I'm telling you this is maybe something you should look for, and maybe you can build a trading strategy above it. The fact that 95% of trading action should happen within it, that tells you that when something is above it or below it, that's a bit abnormal. And in my past of trading algorithmically, I have seen many people of when they see a closing bar, if it's above it, they look to go short, and then they look to play it back to the middle line. Or if it closes below it, they look to go long and then lock in those gains at the middle line. So once again, this is a type of reversion play. So I'm trying to look for opportunities where, so right here, you saw that it closed below it. That could be an entry signal, and then you ride it all the way back up to that midline. So yes, your entry and your exit are a bit dynamic. You're looking to enter when it closes outside of those bands, and you're looking to play it in the opposite direction. When it closes on the outside, that is in no way a continuation signal, because it's actually statistically abnormal for it to have gone that far. So for example, if we closed and the S&P 500 was outside of this band, that is not a signal to buy at that point, because you're already looking at something that is outside of normality based on standard deviation. So the way I would use this is, once again, I think this is a good signal right here that, okay, this was abnormal. We also got the signal, that fact that the bands were very close to each other, that we're about to see a period of volatility. So this might have told you to actually go short and try to ride this back down. And you actually would have locked in your gains that same day, when you actually probably right away when you hit this middle bar. Another potential signal would have been recently here on December 1st, you closed outside to the south side, as in you would have gone long here, and then you would have ended up locking in your gains the very next day, right around here. So you would have rode that one from 451 all the way up to 457. You are looking to play the outside of the bands to the center. That is one strategy. You could be a little bit more aggressive and play it till the next time it hits the next band. So you're not even looking at the middle one. You're looking at it to get to the other side of the band. I'm not the biggest fan of that. I'd prefer myself just like knowing some of the stats and how at least I've played it in the past when I'm using this. I like to play it back to the middle one. But I want to caveat all of this with saying, even John Bollinger himself has said, do not use this indicator by itself. It's good to use it as a filter of certain, I guess, ideas with a non-related additional indicator. You could use it with the moving average convergence divergence. You can also known as the MACD. You could also use it with the RSI. So at this point, this is the S&P 500. And I think this is kind of an interesting way we could have set this up, is right here, we saw that it was essentially oversold because of two different things. We saw that the MACD was extremely high. We saw that the RSI popped above 70, and we saw it was above a 2 standard deviation move out. So you have three different things that are not really related, a little bit related, but not so much, telling you this is oversold. And at least on the 2-hour chart, it needs a period to cool off. So at this point, what it was telling me was, okay, if you're aggressive and you want to make some money on something, I don't know, like a put or something, you can, or you use it to tell you maybe this is not the best opportunity to go long right now, and you might be able to get a better price fill if you just wait a little bit, because three distinct indicators are all telling you that yes, it is oversold. The RSI, the MACD, and the Bollinger Band, the fact that we were on the outside of it. Now, another way you could use this is maybe looking for that good entry on a long position. Coming back to right here, we see that it closed on the bottom side of it. We also see that the RSI was extremely oversold. Well, with this, it closed. Matt, how do you know which one to get in? Well, what you could have done was actually waited for the RSI to go below 30. So at first, not below 30, not below 30, not below 30. But by the time you get in here around 457-ish, well, it's also below 30 on the RSI reading. And if you really wanted to, you could have waited for the MACD to start to kind of cross with there. You might be able to throw in the alligator. Like, my point here is, do not use any of these by themselves. Look for confirmation across various technical indicators to get a better idea of what is or isn't going on. But to quickly recap, this is the Bollinger Band. The middle line is the 20 simple moving average. The outer bands, the volatility bands, are a 2 standard deviation move. And when you're on the outside of it, you're looking for reversion. You're not looking for a continuation. For your entries and exits, I would highly recommend that you use it in concert with another unrelated technical indicator. Once again, the Bollinger Bands, created by John Bollinger. You're the best, Matt. Learned a ton over the past month. Keep killing your Bollinger Band duck dude. Shout out Ryan. Hey Matt, can you say hi? All right, we did that. Shout out once again Enzo and Summer. Is get it right, get it tight the proper mentality to apply to the Bollinger Bands? Was I taught wrong? Get it right, get it tight. I think that's probably a valid one. Oh man. Twitch won't let me say pubic. It's infuriating because I use that word a lot. It's also prejudiced against me typing. Crap face. Tandem plays his best when celebrities are watching, hoping for a beatdown on the Lakers. Matt, you've made Rona life indefinitely better, entertaining, educational. Big up yourself, fam. Chris, I appreciate that. You've been in here for supporting for months and months and months, and I know many of you have. So special shout out to the people who are I guess lawyer supporters and have been in here since day one. I also want to take this quick opportunity to remind you, if for some reason you're having a tough time picking out your favorite Hanukkah, but I mean, Hanukkah, we're almost at the end of it. If you're having a tough time figuring out your Christmas present, just so you know, if you order any of the Moon Gang merch today, tomorrow are probably the last days where it's going to be guaranteed to show up by Christmas. So if you're like, hey, I need some sick gorilla ape gear, I need some sick duck gear, I need some sick Moon Gang merch gear, the website is above my head right now. It's running a pretty sweet deal if you want that for the holiday season. Obviously, don't feel pressured. I just wanted to bring it up to you because if you guys were thinking of it, I just want you to get your orders in so you actually have it in time for Christmas, because remember, across the board, there are some pretty serious supply chain issues. So I just want people to order it early and fast so you don't have to worry about it. All right, so we have AMC hanging out at 30.80, up 7% on the day. We have GME hanging out at 177, up 5.9% on the day. Nvidia coming back around. We see the tech sector, the Qs in the bottom left here, showing some strength. So not a surprise that Nvidia is also going pretty strong. Net right here, we were talking about this one. I think this, once again, I still think it's a solid play. I think just this one, you need more time. Obviously myself, I'm in Nvidia for the second time today because I'm seeing a lot of opportunity in it. If that tells you anything. Am I finally positive again on the second Nvidia play? As of now, no, I'm not. It's trading at 704 and I got in at 711. So I'm slightly down, but with these plays, I want to be more, I guess, I'm attempting to be more helpful because I think there's a bad methodology of everyone on social media. And when I say everyone, I obviously don't mean everyone. Let me just be a little bit dramatic, please. Everyone's just bragging about like, oh, look I got this 100% gain. I got this 200% gain. I got this 1,000% gain. Everyone is bragging incessantly of how good their winning trades are. And of course, they're not really showcasing their like public losing trades. So I thought what was nice is to maybe show you something that's a little bit more realistic trading, is because we're getting the updates from those people when it's already done. With me, I thought it would be more helpful, especially to some of the new traders out there, of what about getting into plays in real time? It's very easy with hindsight bias. Coulda, shoulda, woulda. I wish I did that. If I got in here, if I got in Nvidia today at 306 and I played the weekly YOLOs to 325, I'd be up this percent. It's like, well, how'd you know how to do that? And obviously these Twitter accounts, Reddit accounts, these trading gurus, they always seem to like make these awesome trades, and after the fact, they brag about it. That's not real trading. The best traders, in my humble opinion, and I also just know this factually, still have losing trades. You have to be able to show your winning trades, your losing trades, and it's much more helpful for people. At least I thought it was, and I still think it is when I'm still trying to learn, of people calling out their trades in real time. And what's even better is if they call out their trades beforehand. Hey, if this, and this happens, I'm going to get in. If this, and this happens, I'm going to get out. This idea of like just screenshotting your profits afterwards and being like who's learning from that? It's just very difficult to develop a skill set when people are only curating their best trades. So the Nvidia one this morning, I called out exactly when I got in, why I got in, and I told you I was getting out at 10%. That one locked in, and then I got in again. And honestly, I got in at 7-11. And when I was first recapping it for Power Hour, you were able to get in at 660. You could have got in at 50 cents better than I did. And that's because I messed up. I got excited right around 1. And then I got caught up in this sell-off, and then I'm getting a little bit lucky right now, but I'm going to end up swinging this one overnight. And with it, these don't have to be absurd trades. I'm telling you, I am promising you. Warren Buffett has said this, but it is so true. The eighth wonder of the world is compound interest. If you use 3 trades a week and are continually getting 10%, in 3 weeks, you will have doubled your account. 3 more weeks, you double it again. It does not take much for you to end up doubling and making considerable gains. Focus on percentage. Do not focus on magnitude of dollar. I am telling you, all you should really care about is percentage. Even if you have a small account, if you have a $1,000 account, and you're like, man, how am I going to get 24 more thousand in the US to start, so I don't have to worry about PDT? I've been there. I'm sure there's many of you listening right now. You're like, dude, that is I hate pattern day trading. It's the worst thing ever. I'm telling you right now. In fact, I almost want to do a small account challenge and kind of build it with people to get it above that level of 25,000, because I think that could be the most helpful, because it's very easy for people to be like, oh, okay, remember, trade like a sniper, take only the trades that are good for you. It's easy for you to say, buddy, you're above 25,000. So you're not worrying about the same pattern day trading issues that other people are in real time. So with this account that I'm doing it on, that I have Nvidia on, it's a smaller account. What's it at right now? This account, because I transferred so much out, is now, it's definitely sub. This one, I'm worrying about pattern day trading issues. So I'm right there with you. I'm worrying about Nvidia. I'm do I close it here? This is it. And this is what's so goddamn infuriating with the, just so you know, ding, 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 the market is closed. With our government and this pattern day trading rule, I did not close out Nvidia, but I am up on Nvidia. I could have taken $100 off the table. And what's so infuriating about it is you are forced to make those decisions. While with people who are above 25,000, I would actually argue it's easier to trade, because when it's coming to close and you have a minute left and you're there's a sweat bead on your brow and you're sitting there and you're do I burn a day trade? Do I lock in guaranteed money, or do I take the risk and wait for it overnight? With people over 25,000, for them, it's just okay, am I happy with this percentage or not? They're not worrying about burning an additional trade. So what's kind of interesting is the way the current system is set up with pattern day trading is almost, typically speaking, if you're below 25,000, typically you have less trading experience than someone above 25,000. That doesn't always hold true, but most of the time with people involved in the market, just naturally over years, they've grown their account. Doesn't always hold true. I'm fully aware of that, but I'm just saying typically, because the longer you're in it, hopefully you've made some good trades and your account grew and grew and grew and grew, that type of a deal. So what our government has so fondly given us is the fact that newer people have to trade in more difficult situations. And typically, if you're newer, you're not as skillful. So we're saying that the stock market is a game where if you don't know what you're doing, we're also going to make it more difficult for you, which is completely ass backwards. That makes absolutely no sense. Oh, you're new and you don't really know what you're doing? Cool. We're going to make it more difficult on top of that. That's crazy. Like, that's absolutely insane. It makes no sense that we do it that way, but that's the rule. So I just want to let you know that I've been there. Many, many people have been there before. And I think one way to actually help, opposed to being that person who just is seemingly braggadocious and like, look how good I did on this trade. Look how good I did on that trade. It's like, it's so tiring when people do it that way. The only way to really teach, in my opinion, and learn, in my opinion, is to see shit happen in real time, to see the technicals in real time, to see the reasoning in real time, to see the emotions in real time. This entire concept of like Monday morning quarterbacking and like, I would have done it this way, I would have done it that way. Well, yeah, if you show me a chart, I could have showed you how like I could have played it perfectly, but in reality, that's not helpful to fucking anyone out there. You need to see stuff in real time. That's how you trade, because in real time, those are the decisions you're making. It's super, super easy for a brain to look back historically and look for the times things would have worked. Oh, it would have worked if I bought the S&P 500 here because it was outside of the Bollinger Band. It would have worked if I bought it here because it was outside of the Bollinger Band. But the reason I know it worked is because I have eyes and I can see that right away it popped up. It's super easy to look for the information to confirm to your own bias. I have been a victim of that an endless amount of times. What's a little bit different is in real time saying, whoa, we have a couple things all confirming that this is a little bit overbought. I wonder if there's an opportunity to play this to the downside. You see it in real time without knowing how it's going to play out, which leads me to, let me wrap up this rant, but one little tidbit for all of you of when you're testing on a new indicator, scroll back a little bit. Scroll back, just arbitrarily go back. And whatever your idea is, start to scroll forward and see if it would have played out. So right here, you would have looked at it and been like, whoa, this closed outside of the Bollinger Band. How would that have worked? I don't know. And you scroll forward and you're like, all right, well, it looks like it would have finally exited pretty much break even. So that would have been a scratch of a trade, but you also might have re-entered again. So now you could have doubled up, bringing your average lower. So that could have worked. I'm telling you, that's a very good little pro tip there, is when you're trying to test out a methodology. Do I like Bollinger Bands, alligator bands? Do I like MACD? Do I like RSI? Do I like Wyckoff? Scroll back. Don't look at the chart, pretend you're like momentarily blind, and then just kind of scroll forward and be like, would this have actually worked? Use it on charts when you don't know what the hell's about to happen. Because right here, Bollinger Band, is it perfect? Absolutely freaking not. You would have bought here, you would have bought here, you would have bought here. And then the next day, you would have been like, what the hell gives? Why is it lower right here? And then maybe you would have bought more, maybe you would have bought more, and then you get out on that first one. But what about this one? And then eventually, if you held it, would have worked out. But sometimes you have to see that not any indicator is ever going to be perfect. That's why you want to use multiple indicators. And even with multiple indicators, there's no such thing as a system out there or a trading methodology that has a 100% accuracy. If someone tells you that they have like something that's phenomenally good, that like it's this accurate, it gets me this much money, that person is a liar. That person is an utter, complete liar. They are trying to sell you some sort of bullshit, because it's just, the longer you're around the market, you realize that just nothing really seems to work that way. So use that tip. Don't look for the times that you knew it would have worked. It's very easy for someone to call up and be like, hey, look at that. It would have been perfect. Well, use a different one when you're just like, is it about to work? Scroll forward with it. I think that's a really good tip to be a little bit more realistic about how some of this shit actually plays out. Okay, that's it for the stream. Sorry that my rant, I took you about 5 minutes over, but I hope that someone got something from it. As always, thank you for the support. I'll be posting an update video. I'll be streaming once again, 9 a.m. bright and early. You know me. Waking up, crack of dawn with all the farmers and whatnot. So I'll catch you in the update video. We'll check out the clips on Kohrs Light. Don't forget about that. And then also we will be streaming 9 a.m. Thank you for all the likes. Thank you for all the subs. Don't forget, get your orders in if you want any of that Moon Gang merch stuff, especially if it's a holiday purchase. I just want you to order it soon enough so it's not late. But I'll catch you in the update video. I'll catch you again at 9 a.m. tomorrow. Have a great evening, afternoon, night. Hope you have a phenomenal one. And as always, from me and Chair, best of luck in the markets.